Welcome back. This is Jacob Milliken with 9M Investments, and this is August investment flows. So, looking at them for the last month, equities came in at $17 billion, fixed income at $9 billion. That's a little bit misleading because actually, at certain points over the month, fixed income actually led the way. As you can see within the last week, $5 billion, $5.6 billion is a big week coming into equities, kind of making up good portion of that on the equity side for the month. Looking at year to date, again, equities big numbers ahead at this point, but up until recently, actually fixed income has actually led the way on the year. So kind of misleading. We'll see how this ends up going over the next 3 or 4 months of the year. Um, what mood investors are in. If things feel a little bit more shaky with rates and higher everything for higher longer, going through the peer group section, starting kind of on the where the flows came from this past month. Um, some interesting sectors. European equities. That sector had actually done very well from June of last year to June of this year, really further. Although it's come down a little bit since then, that's a big number flowing out of that in a month's time. So people really rotating from that sector. Gold, I never know with gold. People have different reasons of why they get into gold. More times than not, this is a scarcity play or a safety play in some people's minds. When numbers flow out of gold, typically that's going to go to equities. That's not going to go to a fixed income product. So that tells me that's probably where that's flowing. Energy, again, another one that probably flows into equities and not fixed income. Looking at it from where was it going, North American equities, the big portion of that. Again, still fixed income in there. North American fixed income. Information technology was a big move over the last month. There's several different funds, 72 different funds. Um, and that's a big move for that little sector there. And again, most of that was in 1 week. Um, Again, looking at it from year to date standpoint, broad equity, fixed income broad. Again, that follows up with the overall numbers of where things have gone, kind of where they have come from. Energy, which was a big player last year, information technology overall, government inflation base, so tips is one that hasn't done well. Looking at it from the individual names, look over the last month. Again, information technology, that particular fund is $3 billion. So it was a big move just by that fund alone. This fund's been around since 2004. S&P 500, but there's kind of an interesting mix. You have back into T-bills after a lot of flows out of T-bills. These are going back into that area, but still some good movement into the S&P 500. So, I guess if you want to say investors are more diversified, getting back in, I would tend to agree with that statement. On the outflows, SPY, S&P 500, that's a big number. Even for them, that's a big number over a 1 month move. It's also interesting because that's 12 billion coming out of that fund, but very like mind funds took in about 5 billion. So I don't know if this is a play of people going to these less expensive versions, or SPY is used in a lot of different ways, but it just really a big number for them. QQQ is another one, 3.3 billion coming off. This is a fund that really kind of tells you the mood of investors. If there's heavy flows going into that versus coming out of that, tells you if it's a game on type situation for the markets really. This is over the last week. Again, pretty big number into this information technology fund, especially in a 1 week time. Um, but again, more diversified. Quality seems to be a play, and then bonds were on everybody's mind. So again, more kind of a diversified look. It's interesting with some of these leverage funds on a week 1 basis. They're not typically enough flows flowing into this, but This is one that's focused on semiconductors, and they're trying to get 3 times of whatever's going on. Timing that on a week to daily basis is you better be good at your job if you're going to be doing that. So anyway, jumping into returns for the month. This is an interesting one. All these funds have been down quite a bit for the year, but the cannabis funds were the place to be over this last month. The top 5 ETFs were all based on various versions of cannabis. And what has not done well over the last month is blockchain, which interestingly enough has still done the best on the year, but last month was not the month for blockchain. So again, trying to kind of time and get into one little sector or one little niche and ride that up and down, whether that be something like cannabis or blockchain, crypto. The movements within those funds can be devastatingly good, I guess, or bad. And when I'm building portfolios, these are the types of things we want to make sure that we kind of limit our exposure to. I'll just put it that way. But kind of give you an idea on some of these cannabis funds, even though they went up 21%. If you look at them over the last year or year to date, I mean, we're still down 3.3 on this particular fund. On weed, we are down 7% on the year, even after an 18% month. YOLO, which all-time great name, down 10%. So never make moves on 1 week plays within the markets, and that's kind of why, because even on the long term, these things have been beaten up pretty bad, and so trying to time that of when you're going to get the one up month or week or whatever it may be in this case, kind of fool's gold sometimes. So anyway, I hope this was helpful. If you have any questions, always feel free to give me a shout. Talk to y'all soon.